Hello, everybody. So, I'm sure you saw yesterday there is a demand problem for Teslas again. They have dropped the prices of their vehicles, and of course, most of the news talks about the Model S and the Model X in these price drops because the price drops for the Y and the 3 were not that relevant, they were not that high. But guess what? It's the S and it's the X that's irrelevant to the future of Tesla. It doesn't matter that Tesla is dropping $5,000 on the Model X or S. That really doesn't matter. What matters to Tesla is the Model Y and the Model 3. And they have made tiny drops in prices to the Y of the 3. And actually, I'm pretty confident there's going to be more price drops, and I think a lot of people in the Tesla community are pretty confident about that. But I am excited. If you're in the US, this is that time of the year where you're probably making sure you top off your IRA. So I'm excited because it's the 18th coming up, tax day. So anyways, I'm excited because I'm gonna have some IRA room. Last time we had this narrative. Last time we had the demand problem narrative. The share price dived close to 100. Right, which was crazy. So that's why the point of the video is here we go again. There is a demand problem. Just like every time there is a software update, here we go again. It's a recall. Well, same thing with price cuts. Tesla prices its cars not by model year. It prices its cars pretty much based on their inventory and pretty much sometimes rises the price, sometimes drops the price. But actually, when you look at the inventory, yes, it's trending up just a tad for the Model Y. And okay, it's a little up for the Model 3. That's not that big of a problem. Actually, I can make a very strong case that when there are no cars available for sale, people are just going to go buy a car elsewhere, because typically you don't decide when you buy a car. Typically, your car just stops working and you got to go to work. And so if you got to go to work and your car stops working, you need a car sooner than later, right? You can't take an Uber for like 2 months to wait for a car. So anyways, I think there's an argument to be made. Another argument to be made, which is none of the headlines talk about that, is the prices fluctuate all the time. They fluctuate all the time on Teslas. If you remember the price drop that they did back, I believe it was on January 16, just a few days later, they raised those prices 500 and then another little bit more. So actually, when you look at the prices of the Model Y and the Model 3, I think it's important to look at Matt Jung's data. This is Matt Jung's data. I published a whole video about his data a while back. Just look at his website tracking the prices, and then you can really see the data, and you can see that really that headline is not warranted. Okay, we're just getting back to a few of the days where we're in the lows, but that's not even the lowest price we've had on Model Y. We've been slightly cheaper for one day on the Model Y. So again. Anyways, and the same is true for the Model 3. Actually, it depends on the data you look at. They added a new type of Model 3, but it's not that big of a drop. Right? It's $1,000 up, $1,000 down. It's not that big of a drop. And there's gonna be more drops. There's gonna be more drops in Tesla prices, and that's because it's the only way that Tesla can sell 20 million cars a year. You see, when you look at a lot of auto analysts, they tell you it's impossible for any company to make 20 million cars. And that's because typically the way car manufacturing works is it works like the appliance business. Gas cars are technically appliances, and so the way it works is that you have a pricing that's kind of based on your cost of goods sold that go up, and you kind of hope to raise your prices every year, which is why we've never been able to have a car company that has ever had a market share, say, more than 20%. Teslas are consumer electronics. How do consumer electronics win? Consumer electronics always win by lowering prices up until you get something akin to a duopoly, or a near monopoly in some instances. But most of the time, you're going to have a duopoly because monopolies, companies try to avoid them because otherwise they get antitrust. But that's the nature of technology, right? Phones are getting cheaper, laptops are getting cheaper, storage, USB, flash drive, whatever, it's getting cheaper. That's the purpose of technology. This is the same for cars. And Tony Seba is very, very seriously predicting an electric car for $10,000, right? That's going to be a thing. Most people don't realize that. So the point is what? Marketing would only be a short-term fix. So if you were to spend money on marketing, it'd be only a short-term fix because it doesn't solve the fundamental problem. But if you want to reach a 20% market share, you got to lower the price. Tesla is trying to be mass market. Like, for example, I don't think Tesla cares about Model X and Model S at all. I never look at the data for Model S and Model X. It's irrelevant to me. I don't think they're ever going to release the Roadster. That's irrelevant. That's too tiny of a market. They're going for the whole pie. They're going for like the whole chart pie. They're not going just for a tiny sliver of that chart, right? Their stated goal is 20 million, and there's about 80 million cars sold worldwide. So that's 1 out of 4. That's 25%. That's a market share that we're reaching every year. That's insane, right? Spending of marketing, yes, you would have a nice impact on EPS, on earnings, because sure, you would be catching the low-hanging fruit. You can do a very efficient marketing campaign, just teach a few facts about electric and catch this low-hanging fruit. But that's just short-term thinking. That's not long-term thinking. Right? Elon is a long-term thinker. Like, let's take an example of a company that has historically done a very good job at advertising, Toyota. Toyota is a company, like, if you ask anybody, they'll tell you it's reliable, they're the best cars they've ever had, etc. Toyota has been very good at marketing. They spend $1.7 billion in marketing, and I think when you look at a company like Tesla, who tries to be anti-fragile, if you think about the mindset, I think, of the CEO of Elon Musk is like, okay, I'm going to spend $1 billion on marketing. I'm going to hurt my anti-fragility, and I'm going to drive up short-term earnings. So I'm going to pay more taxes, and all of that for just having to do a more dramatic price cut later down the road, because these price cuts are going to have to happen. So you might as well do a small price cuts incrementally over the years until you get to the average sales price that's needed to get to 20% market share. Or you try to use marketing to prop up your sale price. And then at some point, you're still going to have to do that dramatic price cut anyways. And so imagine if we had like a $20,000 price cut on a Tesla. Yeah, then the analysts would really go crazy. So marketing would raise profits in the short term. But are there any downsides to keeping prices high and spend on marketing in order to gain customers or find or fight for these customers who can't pay $60,000 on a car, right? Yes, there are major downsides. One downside is that your market share grows very slowly. Elon Musk is a tech CEO. He fully understands the concept of making losses to gain market share. His friend at PayPal is Peter Thiel, the author of 0 to 1, the master of the whole idea that you have to reach monopoly-like market share as soon as possible by just denying the competition in business. And that's what we are doing with these prices. That's absolutely doing what we are doing with these prices. Each buyer of a Model Y or a Model 3, each of those buyers, they won't be buyer of a Hyundai EV, of a Ford EV, of a GM Celestiq. They won't be buyers of any of these cars because when you compare them, side by side, they're never going to look compelling next to a Tesla. Like, we've already heard, Ford is already hurting on the Mach-E. The numbers on the Mach-E for Ford are not very good. They're dropping. They had a major drop. Right? We've heard from other manufacturers, they are hurting much more. If you look at, I look at a lot of dealer videos like on YouTube, you can see plenty of lots filled with cars. Like you have so many auto manufacturers right now that are down 20%, 25% on how many cars they sell. These price cuts not only help Tesla deny business literally from a GM or a Ford or a Hyundai because, Tesla's always going to be cheaper. Not only does it do that, but it also puts pressure. It may convince a gas buyer to switch over. Because if your car breaks and you need to buy a new car, you need that car soon, but you're also going to do some research. And clearly, many Americans are going to consider an electric car today. The data I was looking at in a recent video was about 40% that I presented. 40% Americans are considering electric cars today. What is of a greater benefit, right? That's the question we have to ask ourselves. What's the better benefit? Is it spending a few $100 million on a very efficient marketing campaign to boost earnings in the short run? Or not worrying about that, not worrying about tiny tactics that grab your attention, that use the attention of the firm, the attention of the leaders. Just forget about that and focus on the long run, and focus on the long term, and focus on the long-term gains from market share growth by simply making your car so aggressive price-wise that people just flock to them and people just buy them because they make so much sense. And that's why in my roads down here where I'm at in Texas, I see more and more Teslas. And I live in truck country, and I see more and more Teslas. And I think it's a pattern that is seen around the world. So I would argue it's market share that's more important. Market share is one of the most important things. You got to get it fast. Very, 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 very fast. So when you want to sell that many cars, the price point has to drop. When you want to sell 20 million cars, the price point has to drop. And this is where I'll end this video. This is from ARK Invest. This is Cathie Wood's estimates of what market share you appeal to, right? How much of the market can afford your car based on your price model, based on the average price. And you can see that chart is actually pretty consistent. Tesla must be close to 5% in market share. Last time they had 4%. They must be at 4.5% of market share of all cars sold in the US right now. And that's very consistent with the research that Cathie Wood put out here. If you look at that research, she's showing that, you get about 5% of the buyer market. You have 5% of consumers out there who can reasonably afford your vehicles when you are at let's say I don't know, is it $45,000 average sales price? Pretty consistent. If you look at this chart, you can see that if you want to have 25%, you want to have the share addressable by MSRP, you want to address 25% of that market share. That's the goal that Tesla wants. Tesla wants to sell 20 million, right? So Tesla wants to sell 20 million. Keep in mind, this is worldwide data. So they want to sell 20 million. So that means you draw a chart, right? You draw a line here. And when you get to 20 million, you get to about here. So what that tells you when you go down is, I guess around 30,000. I can't really see it too much on that chart, but be around 30,000. So let's just call it, for 29 to 30,000 per car average. If they get to 29 to 30K average sales price, they are going to have an addressable market of about 25%. About 25% of the population will be able to consider a Tesla. And that's the goal. That's the goal. And they're still far from it. So that's why let's expect more headlines about Tesla dropping the prices, because if they want to reach customers that can buy 20 million cars, you have to find a pool of customers that's able to buy 20 million cars a year. In order to find that, you have to drop your price to $29,000 to $30,000. So more price cuts are coming, and that's a good thing. That is a good thing for this company. That is a good thing. This is a company that whose scale is going to be much closer to the scale of companies that we had in the Gilded Age, in my view. This is a company who in scale is going to be much closer to a Standard Oil than it will be to even a big tech company of today. And clearly, I'm not the one seeing that opportunity, as my dear viewers remind me all the time in the comments that everybody talks about Tesla. Why am I talking about Tesla? Well, I'm talking about Tesla because it's my number one position, and I think a lot of people who watch the channel have it as a position as well. So thank you so much for watching. This is not investment advice. This is just entertainment. I appreciate your likes. I appreciate your subscribes. I appreciate all of your support, your comments. Thank you very much, and have a wonderful day.